Turning to trade, the Chinese government is sending a delegation to the United States for trade talks at the end of the month. Now, the market's certainly hoping that this could be a turning point in the trade spat between the two countries. The Dow surging on Thursday, nearly 400 points on that news. To my all-star panel, Wall Street Journal editorial page assistant editor and author of the new book, Borrowed Time, James Freeman. Also joining the lineup, Fox Business reporter Christina Partsinevelos. Thanks for joining us. This news came out Wednesday night, our time, about 10 o'clock. Equity futures immediately went higher. We had a fantastic session that particular day. Even though the Chinese, Christina, playing it a little low-key. It's a small delegation, a low-level delegation. But the market is obviously hopeful. Of
course, and this is a good sign that they are going to play ball with us. And I think that this is an opportunity to show that the United States has the ball in their court. China coming, a delegation. And I think we know, based off of the Shanghai Composite, you're seeing futures markets, you're seeing their economy really, really hurt at the moment. I think what could potentially happen in the near future is a flight to safety with the U.S. dollar, because right now there's a lot of debt in China. So maybe a lot of them will start selling and trying to get U.S. dollars, given the strength in the past little while. Yeah, well, China certainly doesn't want to see that happen, James. No. But it is interesting that also this news came. We've already saw, for instance, the Shenzhen, which is their technology index that I like to focus on. It's down over 50% since its 2015 peak. But we saw what about at the beginning of the year was the biggest technology company in all of Asia, Tencent. It's now down about almost $200 billion in market value this year. They missed. We saw a lot of misses. JD.com missed. We saw some economic data in China that came in at multi-decade lows. Certainly, there are cracks in their economic facade.
Yeah, for sure. The Chinese economy has been slowing, even as the U.S. has been accelerating. They're obviously more exposed to trade than we are. So you could argue we have some good leverage here. But I think what that market reaction is telling you is the world wants to trade. We don't want barriers. I think that's the message that David Malpass, on behalf of the Treasury, is going to bring. I hope the United States is moving away from focusing on the particular deficit number they want and more on let's just lower barriers to trade.
What about the intellectual property theft? I mean, okay, yeah, the idea, let's say the idea compromise. It would have to include that, wouldn't it?
Well, look, so far, and maybe this discussion will be different, the Chinese have basically refused to even acknowledge a problem. So if that continues, I think maybe the response of the U.S. should be, let's get done what we can here, and let's go to the WTO and gather the world to focus on that intellectual property theft with China and keep pursuing it while we allow our economy to grow. You see this week the investment, people waiting on making investments on exporting natural gas to China because they don't know how this is going to get resolved. Let's start exporting, keep exporting, and go to the WTO with problems.
The market was really happy with that news this week, no matter what. Also, President Trump tweeting out on Friday morning about a proposal perhaps to change the way corporations report their earnings. He put it out saying, in speaking with some of the world's top business leaders, I asked what it would is that would it make business, quote, jobs even better in the U.S. to stop quarterly reporting and go to a 6-month system? Said one, that would allow greater flexibility and save money. I have to ask the SEC to study. Now, for me personally, I do believe, I've talked about this for a long time, I think stocks are destroyed for the smallest earnings miss. Even big quarterly misses can have carnage. I mean, carnage on the biggest companies. I mean, take recently Facebook. It was destroyed. Now, we know this company is a beast, but I bet you a whole lot of individual investors probably sold in a panic and they lost money. James, I've been for this idea for a long time. I know there's mixed thoughts on Wall Street.
Yeah, I think the president is proposing a solution to a problem he's already solved. And that is the tax cuts and the deregulation have given American businesses the incentive to invest. And they're doing it. No, but
the quarterly earnings, though, and the way stocks react to them.
Right. So the problem that people have said is that businesses are too focused on the short term. There's this short-termism. It's some flaw in American capitalism. There's very little data behind this, and now there's even less, because what we're seeing is a ramp up in investment by U.S. companies who are also spending a lot on R&D. Now, if this theory was correct, that they're too focused on the short term, why is that happening?
Well, I will
feel
tell
like
you
I
right now, as
disagree.
someone who's helped individual investors for 30 years,
Yep.
it's a disaster.
Yeah.
Its company misses by a penny, and a company loses 20% of its market value. Every CEO I've ever talked to,
if your
every CEO I've ever
valuation-
talked to has told me that they can run their business much more efficiently. If you have a 5-year plan, but you are graded every 3 months, and sometimes so harshly you have to abandon your plan, it's hard to operate business.
Right, which is why I actually think it takes out volatility. It gives you a better picture of the economy. I think there are studies that do prove that short-termism exists amongst CEOs, especially when they're focusing on just hitting their quotas. And you're seeing investments increasing, not by that much. You're still seeing too many buybacks, a lot of M&A activity. There's still wage growth. Still not where it should be. I think that there's still more to be done within increasing productivity in the United States. That's where money should go. And with this changing, I agree with it. But
Look, a lot of recent months, the public companies have been investing more than the companies that aren't public. What does that tell you? That this is not a problem. So, look,
No,
and
I'm
some
not
part
talking
of
about
volatility is needed.
All right.
You want information into
James,
the market.
I can just tell you from someone who's helped thousands of individual investors for 30 years,
Okay.
most people lose their money during earnings season, and most of them come to regret it. Let me tell you, this earnings season so far, 400 companies have reported. Wall Street analysts, guess how many got the revenues right? 0%.
Well, what does that have to do with
That
this?
means that this quarterly thing doesn't work even for the pros who have access to these companies.
No, but they'd be guessing on the 6-month numbers, too.
That's my
Eventually,
point. Let's cut out some of the
numbers have come
guesswork
out.
so that we don't get the volatility, so that individual investors don't sell stocks because they're panicking and they don't take the kind of lumps they take, because a lot of people, they take their losses during earnings season and they never come back to the market. And I think that's unfortunate for the
I'm
mainstream.
not saying the world will end if you go from 3-month to 6-month. I am saying it's unnecessary and it's a solution to a problem that doesn't exist.
Well, a lot of them are doing news. We got to
perfect
go.
world.
I want to say thanks a lot to James and Christina.